Good afternoon, everyone. Namaskar, Sat Sri Akal, Vanakkam, good evening, good afternoon to everyone from my side. I welcome you all in our today's session, that is income tax, and today we will be discussing the provision regarding deduction from gross total income. That is our chapter number 6. So today is the revisionary class of deduction. That is a gigantic chapter, of course, having multiple deductions and multiple provision, the eligibility criteria from each deduction, the time of or the period for which you can claim the deduction, the amount of deduction, and the other conditions. So you can see there's multiple deduction in this chapter, and every deduction having multiple provisions also consisting in each of these deduction. So technically, you can see it's a huge chapter covering almost 100 pages provision and then test your knowledge, etc. concepts. So also important for the purpose of your examination, because in calculation of gross total income and tax liability question, there must be some provision which is from deduction topic also. So there is a possibility also that there could be a separate small question from these deductions, or there could be a possibility that it should be the part of your total or compulsory question in which you need to calculate your total income or tax liability. So I believe that you all are studying very hard to achieve your goal, that is to becoming a chartered accountant as soon as possible. And we all are with you in this beautiful journey of success. So without wasting time, because this chapter we need to cover some important deduction. I'm going to cover some important deduction in my opinion. There's almost 9 deductions we are going to discuss. That is 80C, then I guess 80CCD1, 1B, and 80CCD2. That's a single deduction. Then we will discuss 80D, 80DDB. Then we will discuss 80EEA and 80EEB. 80G we will discuss regarding donation, etc. 80JJAA, that is for new workmen deductions for the additional wages. And section 10AA, that is for special economic zone businesses. So these deduction we are going to discuss, because in my opinion, these are very, very important for your examination. And when I'm saying is these are very important in your examination, so you must not listen like this, that sir is saying only these are important. No, everything is important for your examination purpose, each and everything. But these are more important and having some technical issue. So due to that, I'm going to revise these deduction, going to discuss some important provision, some important topics, some important point from these deductions separately. And of course, we will discuss test your knowledge. I have almost 19 MCQs, 19 MCQs that we will discuss. And then we have previous year question papers in which deduction has been asked. We will discuss those also. Okay. So without wasting our time, okay, there is good afternoon, Bhumika. Good afternoon, Swati. Good afternoon, Mr. Om Krishna Gupta. Good afternoon, Abhishek also. So Abhishek, happy Chhat Puja sir. Same to you Abhishek. आपको भी बहुत बहुत मुबारक हो छठ पूजा की. आप सभी को बहुत मुबारक हो. But I guess you all are going to celebrate all these festivals when you will be a chartered accountant. So every day will be a Chhat Puja, Diwali, etc. when you will be a chartered accountant. So in my opinion, you have to focus on your study. Just try to complete your course as soon as possible, and then every day will be a celebration for your life. Okay. So let's discuss the provision. First of all, some important deduction, what we are going to discuss today. So the basic provision is, we already known that deductions are there and exemptions also are there. Now in the case of default tax regime and the optional tax regime, there's only 3 deductions you can claim under default tax regime technically. And these deductions have been, this is the beautiful diagram, of course, in your study material, in which there is a summarized provision. And you can easily identify which deductions you can claim under default tax regime and which you can't claim in default tax regime. So we have separately given in your study material, you can see Deduction in respect of certain payments like section 80C, 80CCC. So in these category, you have to make some payment or you have to make some investment only. Only in that condition, you are able to claim certain deductions. There are certain deductions which are based upon your incomes. So section 80 JJAA, 80 RRB, 80 QQB regarding royalty of patent and copyright. Those are deduction based on certain income. Generally, deductions are based on investment or expenses, and exemption are based on income. You must have seen there are agricultural income exemption. So generally, incomes are exempt or exemptions are based on income, and deductions are based on expenses or investment. But there are some, of course, exceptions also. So this is the exception. These are the exception. These are deductions on the basis of income. Section 80 JJ, 80 RRB, 80 QQB. In the same case, exemptions are based upon your income. But there are certain exemptions. Those are based upon your investment, or we can say on payment. On some kind of payment only, you are able to claim that exemption. So, koi batayega? Anyone will tell? The exemption which is based upon expenses or investment. Any example? Abhishek Singh instantly answered. Abhishek Singh said section 54. Well done, very well said, of course. Section 54, these are capital gain exemptions, of course. Section 54, 54B, 54D. So these are exemption, but these exemption required certain kind of investment. You have to invest in residential house, you have to purchase certain bonds, you have to purchase agricultural land, etc. So those are exception of the exemption, in which we generally say incomes are only able to claim the exemption, but there are certain exceptions also in that regard. Okay. So these were on the basis of payment. Clear? These were on the basis of income. Deduction in respect of other incomes has been given like interest, etc. You can claim these following for in respect of other income, and these are other deduction, that is section 80U, etc. That is for physically handicapped. And this note has summarized in a single sentence. You must have gone through with the provision in detail. And in the starting of every deduction in your study material, it has been written that this deduction would be available or not available under default tax regime. So either you need to learn from each deduction, or this is a summary of all these cases, that only deduction under section 80 CCD2, that is employer contribution to pension scheme of central government, 80 CCH2, that is Agnipath, of course, scheme, and 80 JJAA. These only three deductions are there. You can claim also in default tax regime. These are also available in normal regime, optional tax regime, but these are three especially available under default tax regime. Except these three, no other deduction can be claimed under default tax regime. Okay, so with the help of this diagram only, you can identify in a question whether these are available under default tax regime or not. Clear? Okay. Now, general provision you must have gone through. There is nothing special to discuss. Differences between deduction under chapter 6A and section 10AA, and exemption under section 10. So what is the technical difference between deduction and exemption? So the meaning, deduction requires some kind of contribution or investment in certain instruments. That is, payment need to be made. But incomes are exempt under section 10, will not be included in computing gross total income. Deduction will be out of gross total income. It would be deducted after calculating of gross total income. But if your income is exempt, then it would not form part of your GTI. It would not be part of your gross total income because it is exempt. Relevant sections, of course, this is sections which has been prescribed over here. Manner of treatment, the income which has been included earlier GTI, it could be subtracted or it could be reduced by providing some kind of deduction which is on payment mode. And of course, the difference, these are not going to be a part of your GTI. One more difference, you can write it down as I explained it to you, that deductions are generally based on expenditure, but there are certain exceptions like 80, QQB, RRB, JJAA. And in the same way, exemptions are based on income, but there are certain exceptions like section 54 and so on, in which you have to pay something. You have to invest to claim an exemption. Okay. Then we have section 80, general points you must have been gone through. There is nothing new. Then section 80 AC, which says furnishing return of income on or before due date mandatory for claiming certain deduction under chapter 6A. The deduction, there are certain deduction. If you want to claim those deduction, you have to file your ITR, your return of income up to due date. These have been prescribed over here, in which most of them going to be discussed in your final level, which the note is going to be explained. That section 80IA, 80IE, 80IA to 80IE, double JA, LA, MP, and PA. These are going to be discussed at final level. Illustration 1 is very simple, already has been done. So deduction from gross total income in respect of certain payments, in respect of certain incomes, in respect of other incomes, other deduction, and a separate deduction for section 10AA has been prescribed, which is for special economic zone units. Okay. Now deduction under section 80C. Technically, if you have gone through with this deduction, there is nothing difficult in this. There are almost 23 points. There are almost 23 payments which are eligible to take the advantage of section 80C deduction, like payment for mutual funds, for life insurance policies, for certain fixed deposits, some NSCs, purchase of certain eligible equity shares and bond, etc. So we have almost 23 investment points in which, if you are going to invest, you are able to claim section 80C, and most of them are so simple. You just need to learn the heading, that in respect of investment contribution, in which respect you can claim the deduction. Like first one is contribution to unit linked insurance, and of course, in a question in which the examiner is going to ask you to calculate your total income or tax liability, definitely section 80C will be there. Whether it was single point deductions for mutual funds or tuition fee, etc., housing loan repayment, etc. But there would be provision from section 80C. So individually, it's very, very simple deduction. You just need to learn these investment sentences only. Like first point is saying unit link insurance plan, you can claim the deduction. Unit link insurance plan of LIC mutual fund, you can claim the deduction. The important is point number 3, which is for premium for life insurance policy. And it is important due to some changes which has been introduced as percentage wise, etc. in this deduction. And it says premium paid on insurance of the life of the individual, spouse or any child, minor, major, and in the case of HUF or any member thereof. This will include a life policy and an endowment policy also. So what are the deduction part is saying, you have already gone through with this deduction in the normal classes. You must have been already watched those classes. So I am just trying to clarify those deduction and just revise in a short or in a speedy manner. So you would be able to recall all those provision, and if there is something which is need to be discussed in detail, so I will discuss those also, like this section 80G. So let me ask you a simple question. Section 80G, it is a provision that donation should not exceed 2000 in cash. So if any amount of donation is exceeding 2000 rupees in cash, so that deduction could not be allowed. So suppose there is a question which says that we have made a donation in cash, rupees 5000. So what amount is going to be disallowed? What amount is going to be disallowed? Or we can say what amount could be not be allowed as deduction? Either 3000 is going to be disallowed, or full value 5000 is going to be disallowed to claim deduction. So let me see. Arinjan is saying whole. Om Krishnan is saying 3,000. Om Sagar is saying entire amount. Abhishek Singh is saying 5,000. Abhishek Singh is saying 3,000. Swati is saying 3,000. Shoaib is saying full value disallowed. Satyapriya Nayak is saying 3,000. Now, this is what I was trying to say, what I am going to discuss. So, you have already gone through with the provision, everything. I have also written the provision over here that there's a provision which says that if the donation exceeding 2,000, it would not be allowed. Exceeding 2,000 would not be allowed. Now I ask the simple question to all of you that whether in this example donation disallowed is 3,000 or 5,000. And let me tell you a very interesting thing that out of the answer I have received, there is a 50-50% answer. Almost 50% students are saying full value disallowed. That means they are saying 5,000, and almost 50% are saying 3,000. So you have gone through with the provision. Still there are confusion. So these kind of confusion, these kind of important points, I am here to discuss regarding these deductions. The correct answer is 5,000. It's not 3,000, Satyapriya. Full amount will be disallowed if the cash donation is exceeding 2,000. And there is a illustration also in your study material exactly for this point. I guess it's a test knowledge question or illustration there in which it is specifically given. I guess it's a test knowledge question, and I have also solved it. We will discuss that test knowledge question. I'm not remember that it is a test knowledge question or example, but we will discuss today. So these kind of things I am going to discuss with you. So if you are going to do this mistake in your examination, it would cost you a lot. Okay. So we are not going to discuss full deductions in details. Those 9 deductions we are going to discuss. The important point like this, whatever I have just discussed with you. Okay. So if section 80C apply, which talks about the premium paid for life insurance policies. So it says if the policy issued before 31st March 2012, then you can claim the deduction up to the extent of 20% of capital sum assured. So date should be remembered if it is issued before 31st March 2012 or in respect up to 31st March 12. If it is on or after 1st April 2012 but before 1st April 2013, so for that 1 year, the percentage has been changed to 10%. Okay. Now, in respect of policies issued on or after 1st April 2013, so in my opinion, for the purpose of examination, this is utmost important. You should have remembered these provision in detail. That in this case, if the person has been physically challenged and as specified in section 80U, then this percentage would be We are back now, Bhargavji. Okay, welcome back, everyone. There was some server issue on YouTube and the ICAI server, I guess. So we are back now. I hope you must have taken some rest in this 5 or 10 minutes. So back to the business. So we were discussing an example, and that was a very interesting example, and you must have given your opinion regarding that question. I've asked you. That was, I guess, over here. Yes. So I have asked you a question, and that was. Okay, Sejal was saying, sir, there is any problem? Yes, there was some problem. It has been sorted now. So the question was, I asked that Mr. A, suppose the life insurance premium he has paid, that is 1,90,000 rupees, and 18 lakh was the capital sum assured. So what is the amount of reduction he can claim under Section 80C? So some of you have said that is 1.9 lakh. Somebody was saying 1.8 lakh. And somebody was asking in the chat box, Bhumika was asking, sir, reduction for LIC premium paid is one-time deduction or for every year of payment? It is for every year of payment. So whenever you pay a premium, you can claim the deduction of that premium paid under the respective years. Okay. Swati was saying 180, and in case of disable, she is saying 190. Very good. Pooja is saying 1.8 lakh. Abhishek, okay. Uh, so those are giving the answer is 1.8 lakh or 1.9 lakh. You all are forgetting that I asked in the question, what should be the deduction on section 80C? And 80C is having limit is 1.5 lakh only. And some of you actually giving answer 1.8 or 1.9 lakh. So that was I was trying to explain you. Please focus on question. And when I asked you that what should be the deduction under section 80C, so that means you have to recall the provision of 80C also before giving the answer of me 10% or premium paid this and that is. So please, we cannot cross the limit of section 80C. So if you do this kind of mistake in your examination, your examiner is very smart. He is going to make this kind of question when you apply the 10% limit, and you will see, okay, 10% is 1.8 and this is 1.9. So the provision says whichever is lower, so 1.8. So this is eligible amount, but it cannot exceed the 80C deduction in any way. And the deduction is maximum 1.5 lakh rupees. So the deduction, if I am asking you, so that the answer would be 1.5 lakh. Got it, everyone? Okay. So those policies issued on after 1/4/13, the percentage is premium paid or 10% or 15%, whichever is lower, but that will find the amount of eligible amount. It should not be called as a deduction, because for deduction, you have to apply the 80C provision. Okay. Now illustration number 2, which is regarding those limit, what we just discussed. So you can go through with this illustration. You can see this is the policy which is on 30th March 2012. So the percentage would be applicable, that is 20% for this case. So it would be 40,000 eligibility of deduction, and sorry, 20% is 1,60,000 or 48,000. So eligible amount would be 48,000 in this case. This is 2018 and 2021. So in this case, it will applicable 10%. And this is a handicap. The limit would be 15% or actual amount payment, whichever is lower. Accordingly, the answer would be so on 15,000 and 60,000. So if illustration 3 say if is under default tax regime, so there would not be any, of course, deduction under section 80C. Premium paid for deferred annuity plan, any sum deducted payable of a government employee, contribution to SPF, PPF, and RPF also can claim as a deduction. We have certain examples. I will discuss with you the test and knowledge question later. Contribution to approved superannuation funds, Sukanya Samriddhi account contributions also can claim deduction in these accounts. Subscription to NSC, contribution to approved annuity plan of LIC, subscription of notified units of mutual funds, contribution to notified pension funds set up by UTI, that is Unit Trust of India, contribution to National Housing Bank tax saving term deposit, subscription to notified deposit scheme, that is 5 year. If you are taking a term deposit of 5 years or more, it could be allowed as a deduction under section 80C. 15th point is different. It says payment of tuition fee to any university, college, school, or other educational institution. So you should remember the deduction would be only for the tuition fee element, which has been charged from the overall fees. It should be paid to any university, college, or other educational institution. And that is within India is the third important point from this paragraph. And it should be a full-time education. It is a fourth important thing. And the last is maximum two child. You can claim the reduction of maximum two child under point number 15 of section 80C for payment of tuition fees to any educational institution that is in India for full-time education. Repayment of housing and also having deduction section 80C. Subscription to certain equity shares or debentures. So it would be written in the examination in the question that is eligible issue, that certain equity shares or debentures should form part of the eligible issue. What is the definition of eligible issue? It has been explained here under. You can go through with these provision in detail. Subscription to certain units of mutual fund, investment in 5-year term deposit, either in a bank or in a post office. In both cases, you can get the deduction. Subscription to notified bonds of NABARD, deposit in senior citizen saving scheme rules, contribution to additional account under NPS. So this NPS concept is interesting. So we have two contribution, tier 1 and tier 2. There are two types of NPS account, that is tier 1 and tier 2. So tier 2 is eligible for deduction section 80C, what we are discussing over here. And tier 1 deduction would be under section 80CCD. So remember, tier 1 would be discussed under section 80CCD, and tier 2, it's for only central government employee, and that is allowable under section 80C. So this is also important. Kindly read this provision in detail. Termination of insurance policy is a separate provision. Now, these are the summary of all these 23 points, what we have discussed. You can see how beautifully Institute, Board of Study, etc. drafted provision for you. They have explained everything in detail in the above part, almost in 5 or 15 pages. And then they have provided a summary for you. There also Saransh also has been made by the Institute for your help. We have the chart presentation, we have the test knowledge question, etc. So with the help of this summary, you can read the important points for these all 23 points, what we have discussed in earlier. Now, section 80CCC is a respect of contribution to certain pension funds. It is inclusive in the overall limit of deduction of section 80C, 80CCC, and 80CCD. So we all know that the combined deduction of section 80C, that is for 23 payments, what we have gone through. Then section 80CCC for pension fund scheme, and section 80CCD1. So overall, the maximum amount which can be claimed under these section could be 1,50,000 maximum, or the eligible amount or the amount paid, whichever is lower. You must have already gone through with the provision which says that deduction cannot be claimed from long-term capital gain, etc., from casual income, LTCG 112, 112A, and short-term 11A. You cannot claim deduction out of those income also. So 80CCC is very simple deduction. Now 80CCD is very important in my opinion, and because we have three separate provision under section 80CCD. The one is 80CCD1. Then we have 80CCD1B, that is an additional deduction. And then we have 80CCD2, that is employer contribution, which can be maximum 14% of salary in case of central or state government employee, or 10% of salary in case of other. So these maximum amount of deduction you can claim under section 80CCD2, that is your employer contribution. A very interesting part about 80CCD2 is the employer contribution is going to be taxable as your perquisite under salary head. Suppose the employer contribute 12% of salary. You are a central government employee and they pay 12% of salary, and suppose the salary, eligible salary for 80 CCD2 comes to rupees 10 lakh rupees. So what will happen initially, this 12% of 10 lakh, that means 1,20,000 is going to be add back in your salary as a perquisite. And then you can claim the deduction section 80 CCD2 of 1,20,000. So technically there would be, effect would be nullify. The amount it's going to be taxable as perquisite under salary head is going to be allowed to your deduction under section 80 CCD2. So as a common person, when we talk with them and we've said that there is a deduction of 80 CCD2, so they might think that that's a benefit to them, but technically there is no additional benefit. Whatever has been included in the salary as a perquisite is going to be allowed as a deduction under section 80 CCD2. In case of central and state government, it's 14%. For other, it's 10%. For 80 CCD1, the eligible amount is, of course, 10% of salary or 20% of GTI in case of self-employed. So if you are a salaried person, that would be 10% of salary. Or if you are a not salaried person, even if you want to invest in NPS scheme, you can invest in this and you will be allowed a deduction of, and that would be 20% of your GTI. Extra 50,000 deduction you can claim under section 80 CCD1B. How it should be claimed, we will discuss it with the help of an example which has been given below here. So pension scheme is mandatory for person entering the service, a contribution of 10% of salary every month from the pension account. Equal contribution would be going to be done by the government or other employer, whatever to whomsoever it may concern. 80 CCD provides deduction in respect of contribution made to the pension scheme notified by the central government. What is the quantum of deduction? 80 CCD 1 says provide a deduction for the amount paid or deposited by an employee in his pension account subject to a maximum. So whatever amount you paid, so we can say the amount deduction would be contribution or 10% of salary. Or if a self-employed, then contribution or 20% of GTI, whichever is lower. Again, we have a maximum limit of 1,50,000, which cannot be crossed. So if you are under default tax regime, then you cannot claim deduction under section 80 CCD1 or even in 1B. You can only claim under section 80 CCD2. Now 1B is the additional amount. Here's a chart presentation for all of you. Section 80 CCD 1B is the additional deduction provided for an additional deduction of up to 50,000 in respect of the whole of the amount paid or deposited by an individual assessee under NPS in the previous year, whether or not a deduction is allowed in section 80 CCD1 or not. So this 50,000 you can claim extra. So now we can see that section 80C, 80CCC, 80CCD1, maximum 150 can be claimed over here. And after including 80CCD1B, this is only for NPS contribution, extra 50,000 can be claimed. So if we take all these together, the maximum deduction could be 2 lakh rupees. Again, the provision says that if you are following the default tax regime, then you are not allowed to take the benefit of 80CCD even 1B. Now, here is a very tricky thing for the purpose of your examination. Suppose if the investment made in section 80C and 80CCC and 80CCD1 all together, suppose is 1,80,000 and 80CCD1B suppose is Not like this. It should be, suppose, investment made in ATC, triple C and CCD1 is 1,40,000 and ATCCD1B is, suppose, 60. If we will solve it with the help of an example, what I'm trying to explain is this. When these deductions are here, you have to apply first ATCCD1B. And then after utilizing whole 50,000 over here, let me explain you in the separate sheet. That would be easy to understand. So these are deduction what we are going to discuss today. TC, CCD1, 1B2, D, double DB, double EA, double EB, ATG, double J, double A, and 10 double A. So the provision what I am trying to explain is this. Suppose there is section 80C deduction is 1 lakh rupees. 80 triple C deduction is suppose 30,000. 80 CCD investment is suppose 70,000. So now if you want to claim the deduction in aggregate, you will take the whole amount maximum up to 1,50,000 over here. But out of this 80 CCD1, suppose there is no 80 triple C, there is 80 C1 lakh and 80 CCD 70,000. So if you solve this question like this, that out of this 1,70,000, you claim 50,000 over here or 70,000. Then balance left for 80 CCD1. You have claimed 50,000 over here. So the balance left is 20,000. So you claim 80 CCD1B over here. 1 is here. And you claim 20,000 over here. So total deduction would be 1,70,000 in this situation. So if the benefit is over there for 70,000, so you have to solve this question like this. 80C, first of all, take 1 lakh rupees. Then 80CCD, the contribution is 70,000. Out of this contribution, first use 80CCD1B 50,000 limit. First use 80CCD1B limit over here. And then utilize the balance amount now left is 20,000 for 80CCD1. So always use this provision like this. If you have the contribution under section 80CCD, out of this contribution, you have to take the separate contribution of 50,000 firstly for section 80CCD1B. And the remaining would be claimed again under section 80CCD1. Because of this provision, if you follow this procedure, you would be able to claim the higher deduction. How? We will see it in a question. So you will understand how we can claim the maximum benefit from this kind of provision. So this is the provision. Now we have the example over here. 80CCD1, the provision says for 80C, the separate limit is 150. Even the combined limit is 150. 80 triple C, we have the limit of 150. 80CCD1 have the limit of 10% or 20% of GTI. But overall, all these three limit cannot exceed 150. 80CCD1B having 50,000 benefits separately. 80CCD2 having 14% or 10% of benefit. Now we have the question. With the help of this question, now you will understand how to follow the process, what we just discussed. The basic salary of, this is page number. So page number 6.27. The question says the basic salary of Mr. A is 1 lakh rupees per month. He is entitled to dearness allowance, which is 40% of basic salary. 50% of dearness allowance forms part of pay for retirement benefit. Both Mr. A and his employer ABC Limited contribute 15% of basic salary to pension scheme referred to in section 80 CCD. Explain the tax treatment in respect of such contribution in the hands of Mr. A if he has exercised the option of shifting out of the default tax regime. So the provision says we have to calculate the salary for the purpose of section 80 CCD. The basic salary is 12 lakh rupees. DA as per the terms of employment. The total DA is 4 lakh 80,000 rupees, out of which only 50% belong to the terms of employment. So salary for the purpose of 80 CCD is 14 lakh 40,000. Now deduction under section 80 CCD1 is restricted to 10%. Now we have two options by which we can solve this question. So deduction section 80 CCD1 is only 10% of salary. You can contribute 15%, 20%, whatever percentage you want, but the deduction would be restricted up to 10% because this is the case of other than central and state government employee. So 10% of salary, that would be 1,44,000. Be allowed under section 80 CCD1 from the contribution of 1,80,000. The contribution was 1,80,000. Out of this contribution, 144 has been claimed under section 80 CCD1. Balance contribution can be claimed under section 80 CCD1B up to maximum 50,000. Now the amount balance left is 36,000. So this 36,000 can be claimed from 80 CCD1B. So the alternate one is says, first of all, claim the deduction under section 80 CCD1 and then claim 80 CCD1B, the remaining amount over here. The alternate option, point number 2 says, now you can claim this deduction like this also. The contribution for 80 CCD was 1,44,000. Now you can claim firstly 80 CCD1B limit. That is up to 50,000 you can claim from here. And now the balance 80 CCD1 remaining 1,30,000. Out of 1,80,000 total contribution was 180. Out of this 1,80,000 we have utilized 50,000 firstly for 80 CCD1B, and for 80 CCD1 the left is 1,30,000. So you can claim the deduction like this, and this second option is beneficial for the purpose of the assessee. You can claim higher deduction. How you can claim higher deduction? You can see in this example also. Suppose this 10% comes to, suppose this 10% comes to 1,70,000. Then if you claim in 80 CCD 150, the remaining would be only 20,000. Suppose in this question also, 80C was also there. Suppose there was 80C, already 1 lakh. The contribution is 1,44,000 for 80CCD. Suppose out of this 1,44,000, if we claim over here, we will discuss it later. We have short of time. So always use this process. Always allowed 80 CCD1 earlier, and then always out of this 80 CCD, always allowed 80 CCD1B earlier, and then claim 80 CCD1. So that will take the maximum advantage of deduction to reduce your total income. employer, Komalpreet is asking, employer will claim deduction of 1,44,000. No, employer contribution has not been, yes, if the employer contribution has been given in the question, so the 1,44,000 would be claimed as deduction under section 80 CCD2. So in this example, the employer contribution has been given. He entitled to 15% of basic salary, Mr. A and his employer, correct. Both are contributing 15%. So in this example, 18 CCD2 would be 14% of your salary. So employer under section 80 CCD2, you can also claim 1,44,000 as a deduction. But first, we need to add that 1,44,000 as your perquisite. So the actual amount would be same. So it would be 1,44,000, but that would be 10% because our case belongs to the other than central and state government. So if it would be a case of state or central government, then it would be 14%. But in this case, it would be 10% of the salary, which can be claimed as deduction under section 80 CCD 2. So our salary was 14,40,000. The 10% of this can be claimed as deduction under section 80 CCD 2. That is 1,44,000. But it would be added as a perquisite earlier. Then you can only claim the deduction under section 80 CCD 2. Moving on to next section, which was 80D. 80D is also very important for the purpose of your examination. 80 CCA, that is the Agnipath scheme. This deduction is available to both the regime, whether you are under default tax regime or you are under optional tax regime. You can claim the deduction of 80 CCH under both the regime. 80D is for medical insurance premium. Let me tell you, we have multiple provision under section 80D. That is for medical insurance premium. So we have medical insurance premium, and for those person, there could not be any medical insurance like the senior citizen. If there is a medical treatment, then that medical treatment expenditure can also be claimed as deduction under section 80D. First of all, the medical insurance premium deduction under section 80D would be allowed as follows: for himself, spouse, and children. The reduction is 25,000 could be claimed in aggregate, and if they are parents, the reduction would be separate 25,000 rupees. So premium paid or 25,000, whichever is lower, of course. There is a 5,000 rupees preventive health checkup deduction also available under section 80D, and this could be paid in any mode, whether cash or check. This deduction could be allowed. This is the joint limit. It's not separately 5,000, 5,000 for spouse or parents. It's in combined maximum 5,000 as a preventive health checkup. You can claim a deduction. Premium payment should be in account paid check only to claim the deduction, but this health checkup need not to be in account paid check. It could be in cash or check anyway. If any one of them for which we have claimed the medical insurance premium, if it is a senior citizen, then the limit would be 50,000 instead of 25,000. Those cannot claim or do not have the benefit of medical insurance premium can claim this deduction as the medical treatment expenditure. So this is the basic summary of section 80D, and it's very interesting also. So you can see deduction in respect of insurance premium, that is 25,000 rupees. For parents is also 25,000 rupees. Deduction would be 50,000. Even if for anyone, if he or she has attained the age of 60 years or more and a resident of India. So in case of senior citizen, the limit would be 50,000 instead of 25,000, whether for himself or whether in case of parents. This 5,000 towards preventive health checkup would be allowed with whatever the mode of payment, cash, account paycheck, etc. For other cases, it should be account paycheck. The important point has been inserted like 2 or 3 years back, which has been provided as a welfare measure towards senior citizen. This medical expenditure benefit is only for senior citizen because generally they do not have any medical insurance premium policy by the policymaker. Person of the age of 60 year or more resident in India who are unable to get the health insurance coverage, reduction up to 50,000 would be allowed in respect of any payment made on account of medical expenditure in respect of such person. In case of HUF, of course, 50,000 would be the benefit for any member of the HUF if that is the case of senior citizen, or it would be 25,000 as in normal case. Other conditions are normal. So it's a summary of the deduction which has been provided in the study material also. Deduction would be 25,000. It would be 50,000 if the age is 60 year or more and resident. If there is no insurance premium, then you can claim the deduction instead of premium medical treatment expenditure. The overall limit for preventive health checkup is 5,000 for both, whether for spouse or etc. parents. So that was section 80D for the medical treatment. Next is section 80DDB, what we are going to discuss. And that is for deduction in respect of medical treatment. If you are suffering from specified diseases, then for the medical treatment, you can claim the deduction under section 80DDB. The amount of deduction is 40,000, and if it is a senior citizen, that amount would be up to rupees 1 lakh rupees. Next is quantum of deduction. Section 80 for higher education loan, it's a very simple provision. It says if you have for himself or spouse, etc., you take a higher education loan, then you can claim the interest of that higher education loan as a deduction under section 80E. The time duration, the amount of deduction has been explained. Of course, you can go through with the provision. 80EE and 80EA almost same, but there is a difference. Very specific difference has been made. Those both deductions are for house property. And if any loan has been taken for house property, you can claim the deduction under section 80EE if certain conditions are satisfied, and you can also claim the deduction of rupees 1,50,000 if certain conditions are specified. But section 80EE and EA are mutually exclusive deduction. So if you are able to claim the deduction of section 80EE, you cannot claim the deduction of 80EA. Or vice versa, because the conditions for 80EE is specifically says the value of house should not more than 50 lakh. It would be maximum up to 50 lakh rupees. If the house value is exceeding 50 lakh, you cannot claim this deduction. The assessee should not own any residential house on the date of sanction of the loan. Loan should be sanctioned during the previous year 1670. So the loan has been sanctioned before this date or after this date, you cannot claim deduction under section 80EE. And the loan amount must not exceed 35 lakh rupees. If any of the condition does not fulfill, you cannot claim deduction under section 80EE. The amount of deduction is extra 50,000. Why I am saying extra 50,000? Because up to the amount of 2 lakh, you are going to claim the deduction under income from house property. So whatever amount of reduction has been claimed under income from house property, as per the provision of that head, the balance 50,000 you can claim over under section 80EE. 80EA is more important than 80EE because this is after financial year 1617. Having certain specific condition, and the limit is also 1,50,000. And now you can see the stamp duty value of the house should not exceed 45 lakh rupees. So the stamp duty value should not exceed 45 lakh rupees. The individual should not own any residential house on the date of sanction of the loan. The loan should be sanctioned between 1st April 19 and 31st March 22, and the individual should not be eligible to claim deduction under section 80EE. If you have claimed deduction under section 80EE, you cannot claim this deduction. Either you can claim 80EE if you satisfied the condition of that section, or you can claim section 80EA if you satisfied the condition of this section. The amount of deduction could be maximum 1,50,000, and this is over and above the limit which has been prescribed under income from house property. Here the provision which has been prescribed regarding the treatment in income from house property and the deductions. 80EE, this is for electric vehicle. Deduction in respect of interest payable on loan taken. For the purchase of electric vehicle, you can also claim the deduction. If you're going to purchase the electric vehicle on loan, the interest can be claimed as a deduction, and the amount of deduction is 1,50,000. It's a huge amount of benefit, and the condition load should be taken for purchase of an electric vehicle. Assessee should be an individual. The sanction date would be under 1st April 19 till 31st March 23. Loan should be from any financial institution like bank, etc. The benefit of this interest you can claim until the amount of repayment. The maximum amount could be claimed as 1,50,000 rupees. There's a universal provision that if you have claimed deduction under any head of deduction, you cannot claim the benefit of that amount under any other head of income tax, or vice versa. These are the examples you must have gone through with the normal class. Mr. Kiran Kumar is asking, Sejal is saying, sir, can I explain that premium paid or sum assured topic again? Okay. Mr. B. Kiran Kumar is saying, sir, for converting of capital asset to stock in trade, up to the conversion date, capital gain will apply. And from that date to this is the question of PGBP, Kiran Kumar, and you are asking in deduction topic. Okay, fine. I will take the picture of this question, and in the next class, you can ask me this question. I will answer your question there. Okay. I have taken this picture you have sent on the query portal. Okay. So deduction respect of donation, 80G, it's a very, very important deductions. And I've seen that in your test to knowledge question also, and in the question paper also, this deduction is, I guess, very important for your examination because it has very different characteristics. Like we have certain funds, the 4 types of funds have been prescribed to claim the deduction for these donations. These are first category of funds in which you can claim 100% deduction of the amount paid, and that I call fixed deduction. So if you pay donation in these certain funds, you will get 100% deduction, of course, up to the amount of GTI, and that is fixed. You need not to compare it to anything else. The second is, only one fund is there, that is Prime Minister Drought Relief Fund. In this category, if you donate, you will get the 50% fixed donation of the amount of donation. The third category is certain specific cases in you will get 100% deduction, but on variable basis. You have to compare it with the adjusted total income sum case. In that case, you can claim the variable portion of deduction. It's not fixed. And the fourth category is 50% variable category, in which we have to compare the amount of payment with certain other things. So those 2 categories are fixed categories. First one is 100% deduction fixed category. The second one is 50% fixed category. The third one is 100% variable category. And the fourth one is 50% variable category. These specific categories has been mentioned. The first one is over here. Donation qualifying for 100% deduction without any qualifying limit. So these are the funds in which if you make any payment, you will get 100% deduction of that payment without any limit up to the amount of GTI, of course. So these are the funds name. The second 50% fixed category limit is, that is Prime Minister Drought Relief Fund. Earlier there were, I guess, 4 funds, but now it has been only single fund has been there, in which if you paid, you will get 50% deduction of the amount of payment. Now the third category is 100% deduction, but subject to certain limit. So that's why I called it variable. It's not fixed, it's variable. Clear? Mr. B. Kiran Kumar, sir, this 1.5 lakh is a cumulative figure, but not per year. Is it correct, sir? In reference to which question you are asking this, Kiran? Okay. 80EEA. For 80EEA, the limit is 1,50,000, and it has been specifically said that you can claim it till the amount of payment, subject to interest payable, whatever interest you pay, maximum 1,50,000 you can claim for each year. It's a each year, it's not a cumulative figure, okay? Whether it's for EEA or whether it's for EEB also. Maximum deduction loan 1 lakh over and above the deductions in 24B in respect of interest payable on loan borrowed for acquisition of a residential house property. And it says, if you claim deduction in this year, you cannot, if you claim deduction of this section, you cannot claim this deduction under any other head. And this deduction can be claimed for each year. Like the interest deduction, we can claim 2 lakh rupees each year under income from house property. In the same case, we can claim deduction section 80EEA 1,50,000 for each year. If the interest value is up to 1,50,000, you can claim that in each year. It's not cumulative. Okay, next is, so that was the second fixed category. Now the third one is donation qualifying for 100% deduction subject to qualifying limit. So now we have 2 contribution in which you can claim 100%, but limit is subject to qualifying limit. What is the meaning of qualifying limit? The qualifying limit has been discussed later, which says 10% of adjusted GTI or amount paid under category 3 plus 4, both variable, and this, whichever is lower, would be called your qualifying limit. So qualifying limit we have to calculate. The qualifying limit would be 10% of your adjusted GTI, adjusted gross total income. It's need to be compared with the amount paid under third and fourth category in aggregate. If in this variable category you have paid, suppose 3 lakh rupees, and in fourth category you have paid, suppose 1 lakh rupees. So the amount paid would be 4 lakh rupees. So 10% of adjusted GTI need to be compared with the amount paid under third and fourth category both. The lower would be your qualifying limit. Now how adjusted GTI would be calculated, that has been explained hereunder. So these 2 funds contribution 100% variable, and now we have 50% variable contribution detail. We have these 5 cases in which if you have paid any amount, then donation deduction could be claimed up to 50% variable. What is the qualifying limit? It has been mentioned that 10% or the amount has been put in a category third or fourth, whichever is lower. How we need to calculate the adjusted GTI? Compute adjusted GTI like this: GTI reduced by other deduction except 80G, short-term gain under section 111A, long-term under section 112A and 112, or any other income on which tax is not paid. That would be your adjusted GTI. No deduction shall be allowed in respect of donation of any sum exceeding 2,000 unless such sum is paid by any mode other than cash. So I've already asked in the starting that if we have paid 5,000 in cash, then there would be no deduction. There would be no deduction allowed. The question you must have gone through, the example which has been given over here. Now 80 double G is for rent paid, simple deduction. You have to find out the minimum value out of the three amount. That is 5,000 rupees per month, which is a fixed limit. Then the rent paid minus 10% of adjusted GTI and then 25% of adjusted GTI. Out of these three, the lower would be going to be exempted or would be claimed as deduction. Okay. Now, deduction in respect of donation for scientific research and rural development. The important thing of this deduction, this is available only to a person who do not have any income under PGBP head. Because if he would earn something under PGBP head, then this expenditure can be claimed under section 35 of PGBP as scientific research, development, contribution, etc. So this deduction is available only for those SSC not having any income under PGBP head. 80 GGB, that is for contribution to political parties by Indian company or by any other person under section 80 GGC. So GGB is for Indian company and GGC is the same provision for other than Indian company. Remember under section 80G, up to 2,000, cash donation is allowed. But under section 80 GGB and under section 80 GGC, no cash payment allowed. Not even 2,000. You cannot pay any donation to any political party via cash under section 80 GGB or under section 80 GGC. Now 80 JJAA, which talks about deduction in respect of employment of new employees. We're talking about new employees. So where the gross total income of an assessee to whom section 44AB applies. 44AB, किस चीज का 44AB? Who will tell? Section 44AB. Audit, correct. Not book maintain, Abhishek Singh. It's regarding audit of books of accounts. So if your business falls under section 44AB, then you are able to claim deduction under section 80 JJAA, that is for new employment cases. Okay, Arun Jain was asking, sir, if SSC's parents' mother has medical premium of 55,000 and father medical treatment of 50,000, then deduction would be maximum 50,000 in any case. So if you are having premium, deduction is maximum 50,000 for parents. So if there is a medical premium of 55,000 and father medical treatment is 50,000, in aggregate you can claim maximum 50,000 deduction. It would not be available separately, Arun. Okay, it would be in together. Either you are going to claim 55,000, but maximum you can claim 50,000 out of 55,000 also. So either you will choose the premium or you will choose the treatment. The maximum benefit would be restricted to 50,000. Sir, in 80C, deduction is allowed if fees is paid for cousin child. No, deduction would not be allowed, Pooja. But if you are under section 80C, only your children would be considered for the purpose of deduction. Correct. It was tax audit section, which says if your business covered to be get audited, then you can claim the deduction under section 80 JJAA. Includes any profits and gains derived from business, a deduction of amount equal to 30% of additional employee cost in the course of such business. So whatever will be the salary of those employee, those are eligible under section 80 JJAA. Suppose their salary is 10 lakh rupees. So you are going to claim the 10 lakh rupees under PGBP head as a salary. And this is the extra benefit. The 10 lakh is you can claim under PGBP head. 30% of this, that means 3 lakh rupees, you can claim under section 80JJAA. So practically you are paying only 10 lakh rupees as a salary, but the benefit you are actually taking for 13 lakh rupees. Extra 30% would be allowed as a deduction. This is to encourage the new employment in our country. So this 30% is the extra benefit of the payment you have already claimed under your PGBP head. Condition required to be fulfilled. The business should not be formed by splitting up or the reconstruction of existing business. Their business is not acquired by the SSC by way of transfer from any other person. So the summary is the employee should be new. If you change the name of the business, if you reconstruct the business, if you purchase a business from another person, in that case, employee would remain the old. There is no new employment has been provided. So there should be new employment to claim the deduction under section 80JJAA. Meaning of certain terms. What is the meaning of additional employee cost? Additional employee. This is very important for the examination purpose. The definition of additional employee. Exclusion from the definition. These employee would not be treated as new employee. An employee whose total emoluments are more than 25,000 per month. So any employee is getting more than 25,000. He is not eligible for this deduction. An employee for whom the entire contribution is paid by the government under employee pension scheme, not eligible for deduction. An employee who does not participate in RPF, not eligible for deduction. An employee employed for a period of less than 240 days in the previous year. And in case of business of footwear and apparel, this limit would be 150 days. So if any employee is appointed less than 240 days, not eligible, less than 150 days, not eligible, but there is a special provision has been made. Suppose employee appointed in December 2023. So he would not be able to complete the 150 or 240 days limit. But if that employee is going to remain in the organization for next financial year, for financial year 24-25, for exceeding 240 or 150 days, as the case may be, then in that year's salary, the salary of that employee can be claimed as deduction also. Like for in this example, you can see 75 employees, date of appointment is 1st April 23. They are regular employees and total monthly payment is 24,000. All condition has been fulfilled, so they are eligible. 125, 1st May 23, regular, but the amount of payment is exceeding 25,000. So these are not eligible. These are casual, 50 employees, so definitely not eligible. These are regular, but less than 240 days in the business because the manufacturing of computer business. So not eligible for deduction, but these employees can claim as deduction if they will remain in the business for more than 240 days in next year. So the salary of these 100 employees, whatever amount the salary will be there, the 30% of that can be claimed as deduction under section 80JJAA, but in next year, not in this year. 80 QQB for reduction for royalty, etc. 80 RRB is for patent royalty, that was for books, etc. royalty. Reductions in 80 TTA is for saving account interest up to 10,000 you can claim as reduction of interest. TTB is for senior citizen, and the interest amount on deposit or saving account does not matter, but they can claim up to 50,000 rupees reduction under section 80 TTB. Now there is 80U, that is for person with disability can claim 75,000 or 1,25,000 reduction if he is not dependent upon anyone. And in case of severe disability, deduction would be 1,25,000. In case of other than severe disability, it would be 75,000. Section 10AA is for a special economic zone unit deduction case. So if you are having an undertaking which begins to operate any article or thing in a special economic zone, and if you are fulfilling certain condition, then you can claim deduction under section 10AA. For starting 5 year, you can claim 100% of the profit of the export turnover upon total turnover from that unit as a deduction up to 5 years. After 5 years, for next 5 years, you can claim the 50% deduction of that proportionate amount of profit with proportion to export turnover of your total turnover. And after that, 10 years of span of time, like for starting 5 year, we have claimed 100%. For the next 5 year, we have claimed 50%. So after these 10 years, for next 5 year also, you can claim this deduction, but a certain amount of that deduction, the amount which we claimed as deduction, need to be transferred to a special account that's called reinvestment account reserve. You have to transfer that amount to SCZRRA account that calls special economic zone reinvestment reserve account. So if you transfer that 50% of deduction amount to this specific account, then you can claim the deduction for next 5 year also. So total number, maximum number of year you can claim deduction is 15 years. The starting 5 years, it would be 100% for 5 years consecutive. For next 5 years, it's 50%. And for the third 5 years plan, you can claim deduction up to 50% of the profit if you transfer that profit to SCZRRA account. And you have to utilize the money for business purpose also, for purchasing of new plant and machinery within 3 years, etc. So you have to fulfill certain condition, then you are able to claim the deduction of section 10AA. So that was section 10AA provision. So we have almost covered the important deductions which has been in this chapter number 6. Now we will discuss our MCQ, and I guess now it's break time. So let me see if there is any query. Okay. I have noted down your query, Mr. Sai Kiran Kumar, and we will discuss this query in the next session, of course. So we are going for a short break, and when will we resume? We will continue with our MCQ, test to knowledge questions, past year examination question, and MTP questions. Okay. So Mr. Bhargav, can we take a short break? So Bhargav, ब्रेक कर दीजिए भार्गव जी. Resume करें भार्गव जी. Welcome back, everyone. Okay, Mr. B. Kiran Kumar having a query, and he's saying the TG donation exemption given to employees while calculating TDS only Prime Minister Relief Fund is considered. For all other donations under 80G, employees have to claim relief while filing ITR only. Is it correct, sir? This is the practical situation, what you are talking about, Mr. B. Kiran Kumar. But for the purpose of TDS provision, there is no concept like this. If the assessee, if the employee having has provided the details regarding the deduction, etc., and if the employer finds it out accurate or genuine, so he should consider all the deduction. Practically, it's happened. That is not for our criteria or our area of discussion. But the what should be happen as per the law is they should provided all the deduction if the genuine evidence are there, which has been provided by the employee to the employer. So the employer should consider all these donations for the purpose of TDS deduction. Next is, okay, so we were discussing 80C. First of all, we will discuss the MCQ, then we'll take the other queries also. So now you should have ready with your pen, paper, and calculator for our MCQ. So this is our MCQ number 1 sheet. Very simple MCQs generally. Question number 1, kindly read the provision and then give me the answer. Mr. X has taken insurance policy on his own life on 1st April 23. The capital sum assured is 1 lakh rupees. He has paid insurance premium of 30,000 during the previous year. He is eligible for deduction under section 80C amounting under optional tax regime, of course. So Abhishek is saying 1, Swati is saying 1, Om Krishnan is saying, C and C, and Om Krishnan also giving the answer as C. So the provision we have discussed under section 80C, that is regarding life insurance premium, because the premium has been taken on 1st April 23. So the limit is 10% of capital sum insured or 15% in case of handicap of capital sum assured. So in this case, there is no information regarding the disability. So we will apply this percentage and the correct answer would be C. Very well done. Question number 2. Mr. X has taken a life insurance policy on life of his minor son suffering from severe disability on 1st April 2023. The capital sum assured is 1 lakh. He has paid insurance premium of 30,000 during the previous year. He is eligible for deduction under section 80C amounting under optional tax regime. So now 15% would be the case because the person is having severe disability. So in that situation, the correct answer would be, of course, option number B, 15,000. Very well done. The aggregate amount of deduction under section 80C, triple C and CCD 1 and 1B shall not exceed under optional tax regime. What is the correct answer of question number 3? Pooja is saying 1,50,000. Arun is saying A. Om Krishnan is saying D. Kindly read the question carefully first. The provision is this. I am asking about deduction aggregate amount 80C, triple C, CCD 1, CCD1B also. We have included CCD1B also. So 80C, triple C and CCD1 aggregate could be 1.5 lakh. And because I have written 1B also, which is having a separate limit of 50,000, so aggregate would be 2 lakh rupees. So option D would be a correct option. And I've also told you, whenever you apply section 80 CCD 1B, the preference should be given to 80 CCD 1B, then 80 CCD 1 need to be applied. What or how it can impact, let me just frame an example like this. Suppose section 80C deduction is 1 lakh, 80 triple C deduction is 40,000, and for 80 CCD we have paid 70,000 rupees. Now if I claim 80 CCD1 before 80 CCD1B, if I claim 80 CCD1 out of this 70,000, which is maximum 50,000 I can claim over here. So the aggregate limit of deduction, what I can claim in this situation would be 1,50,000. The 80 CCD contribution was 70,000, but I have claimed 50,000 of this 70,000 under 80 CCD1. The remaining 20,000 now can be claimed under 80 CCD1B, which will remain 20,000. So total deduction, what I can claim is 1,70,000 if I follow this structure, that first I am claiming 80 CCD1 and in the second position I am claiming 80 CCD1B. But I have advised you that kindly follow the alternate procedure. So you will get the maximum benefit. How? First of all, you have to give the benefit to 80 CCD1B. Then the remaining should be utilized under section 80 CCD1. In the same question, if we are going to solve as per alternative method, then it would be like this: 80C 1 lakh, 80 triple C 40,000. Now 80 CCD contribution is total 70,000. And now I am suggesting you firstly apply out of this 80 CCD contribution, firstly utilize the amount under 80 CCD 1B. So out of this 70,000, we can claim 50,000 separately under section 80 CCD 1B. And the balance amount after utilizing this 50,000 can be now claimed under section 80 CCD 1, which will remain 20,000. So in aggregate, it's 1,60,000, but we can claim 1,50,000 maximum for these three deduction, and separately we can claim 50,000 for 80 CCD 1B. So aggregate deduction, we can claim now this 2 lakh rupees. So if you follow this method, what is the difference between first method and second? The second method, the alternate method, says that you have to claim firstly out of 80 CCD, firstly utilize the limit for 80 CCD 1B, which will be maximum 50,000. And the balance should be utilized for 80 CCD 1. So in that situation, you will claim 2 lakh rupees deduction. But if the vice versa you follow, that if you utilize 80 CCD firstly for 80 CCD 1 and balance is for 80 CCD 1B, so you might be in a position of loss or claiming less deduction, which will increase your tax liability. So this was the method I was talking about, and this is the example to show you that what's the advantage of following the alternate method. So in the examination also, you will follow this method to reduce the tax liability also, because as per the examiner or as per the solution, we should always try to calculate the tax which is more beneficial to the assessee. And the alternative method provides the benefit to the assessee rather than applying the first method. So now the question number 4 says, Mr. Manish pays 35,000 as medical insurance premium by check under a scheme framed by GIC, General Insurance Corporation, for his mother aged 65 years and who is dependent upon Manish. If her mother is a resident individual, what amount of deduction will be allowed to Manish from his GTI under optional tax regime? So her age is 65 years. Does it make any difference? Okay, Bhumika is saying A, Shoaib is saying A, Pooja is saying A. Suppose if I change this question, mother age is 65 year, and suppose father aged 59 years. So one parent is under 60 year and other parent is over 60 year. So would your answer be changed or it will remain the same? So if the father age 59 years and mother age is 65 years and the premium has been paid for mother, then what would be the answer will remain the same or it would be changed? Of course, the answer will remain the same. Exactly, correct. Well done. Now suppose mother age was also 58 years. Now what? If mother age is 58 years, then the benefit would be maximum 25,000. Well done. You all are actually giving the answer. That's really good to see that exactly the answer would remain 25,000 if the parent's age is less than 60 years. Now suppose in this question, if this is not medical insurance, this is the medical treatment, then again the answer would remain the same. The question is this only, and I am only changing this, that the medical insurance has been replaced by the medical treatment. Then of course, if the mother is 65 years, the answer would remain 35,000, same. Next. Varun incurred medical expenditure of 12,000 towards cataract surgery of his mother, age 70 years. She also went a minor surgery for which he incurred an expenditure of 26,000. No medical insurance for mother. Deduction under section 80D will be, how much will be the deduction amount in this case? Okay, 35,000, same. Kiran is also answering over here and Sejal also answering. Good. The correct answer would be, of course, both are medical treatment and they would get the benefit of deduction under section 80D, and which would be 26,000 plus 12,000. So 38,000 would be the correct answer in this case. Next is Raghunath repaid during previous year 23-24 education loan of 60,000 and interest on education loan of 18,000 taken from PNB for his son to pursue PG in Germany. The loan was taken in financial year 1920 and the payment commenced from financial year 22-23. The amount eligible for deduction under section 80E for the assessment year 24-25 is under optional tax regime. Om Krishnan is saying C. Pooja is saying D. The correct answer is option number C. Educational institute should be in India. That is a condition for section 80C tuition fees condition. That is not for section 80E. So educational institute should be in India. That is not a condition for 80E deduction. So 18,000 would be allowed. The amount eligible deduction would be the interest amount, and the interest amount is 18,000, which has been given over here for the financial year 23-24. So it would be allowed as a deduction. The correct answer would be 18,000. The maximum amount of deduction of section 80GG in respect of rent per annum is, what should be the maximum amount of deduction of section 80GG for rent per annum we can claim? For the purpose of claiming the deduction under section 80GG, we have to find three amounts, out of which the lowest could be claimed as deduction. And there's a fixed limit of 5,000 per month. So it cannot be exceeded. The limit of 5,000 per month, that means the total amount could be 60,000. The correct answer is option number A. Well done. Shravan engaged in the business, paid monthly rent of 5,000 by check for his residence during the previous year 23-24. His adjusted total income is 3,40,000. The amount eligible for deduction under section 80GG, how much it would be? Kindly solve it and tell me the answer. We have three amounts to find out the deduction under section 80GG. So what would be the correct answer? How much would be the deduction under section 80GG? I need the deduction amount. First one is 5,000 per month. The second limit is rent paid minus 10% of adjusted GTI. And the last is 25% of adjusted GTI. So first limit would be 60,000. Rent paid has been given in question. Again 60,000. And 10% of adjusted GTI. That is 34,000. So 25% of adjusted GTI would be 340, 85,000. So this is 26,000. The lowest would be the deduction. The deduction would be 26,000. So the correct answer would be C. Next is, what is the maximum percentage of salary allowed as deduction under section 80CCD2 for government and other employee respectively? For central government and state government, it is 14%, of course. And for other, it's 10%. So the correct answer is option number A. Well done. Next is, what is maximum limit for section 80EEB for loan taken for purchase of electric vehicle under optional tax regime? So 80EEB is for electric vehicle. interest on electric vehicle. So that is, we just discussed today, that is 1,50,000 rupees. So the correct option is option number B. So that was our MCQs. We have more MCQs to solve. Let's discuss those MCQs also. Then we will discuss our last year question, etc. So Mr. Ram has taken life insurance policy on his own life on 1st April 23. The capital sum assured is 20 lakh. He has paid insurance premium of 3 lakh during the previous year. How much amount is eligible for deduction under section 80C? So what is the percentage limit need to be applied? You have to think about it also. Swati is saying B, that is 2 lakh. Okay. Pooja is saying B, well done. Bhumika is saying 2 lakh rupees. B option. Om Krishnan is saying A. Shoaib is saying A. Bhumika, Swati, Pooja, I have just explained when I was teaching section 80C provision that I am asking deduction section 80C. And you are giving answer option number B. You are taking 10% of this 2 lakh. This is eligible amount, eligible premium. This is not 80C deduction. How can this exceed 1,50,000? We discussed this provision, exactly same kind of question in today's session, in the starting, in the beginning of this class. And you are again doing the same mistake. So the correct answer would be A. I am asking the 80C deduction. How could it exceed the 1,50,000 limit? Please focus on the questions. Second, Mr. X has incurred medical expenditure on life of his minor son, who is wholly dependent on Mr. X suffering from severe disability in financial year 23-24 for rupees 15,000. He is eligible for deduction under chapter 6A amounting under optional tax regime. What would be the correct answer of this question? Abhishek is saying A. Pooja is saying D. Okay. Any more answers? Shoaib is saying B. Om Krishnan is saying A. Komalpreet is saying B. Swati is saying again A. Why? A, Swati, why? What is the reason for your answer? Why it's A? And Pooja is saying D. Why it's D, Pooja? You should understand the provision of the question firstly. I have told you multiple times, do not find the solution. First of all, understand the question. The question is for medical expenditure on life of his minor son who is wholly dependent on Mr. X, suffering from severe disability. If the severe disability point is there, so technically we are discussing about the handicap case, the physically disabled case under the deduction category, and for which we have section 80DD and 80U. 80U provide deduction to that handicapped person who is independent. The handicapped is going to claim the deduction under section 80U from his GTI. But if he is dependent upon someone, then on that person upon which the handicapped is dependent, he or she can claim the deduction under section 80DD in case of severe disability. In case of severe disability, it is 1,25,000, and other cases it's 75,000. It's a fixed deduction, irrelevant of actual amount of expenditure has been incurred in this case. So the deduction in this case would be option number B because it's a severe disability as been explained in the question. I hope it's clear. Deduction under section 80 GGC is not available to following if all other conditions are satisfied. Okay. Finally, tell me the correct answer. Om Krishna is saying C. Bhumika is saying C. Swaroop is saying C. Swati is saying C. Correct. In case of 80 GGC, because we have two deduction for payment of donation to political party or electoral trust, 80 GGB and 80 GGC. 80 GGB provides the deduction to Indian companies only. And other than companies, deduction is provided under section 80 GGC, which specifically excludes local authority. So local authority cannot claim this deduction. So the correct option is option number C. Next, Mr. Manish pays 21,000. Now this is an interesting question. 21,000 as medical insurance premium by check under a scheme framed by GIC for his mother aged 65 year and resident, and also paid 26,000 for his wife for the same. Expenditure of preventive health checkup also incurred for 8,000 for mother. What is deduction allowed under section 80D to Mr. Manish under optional tax regime? Kindly take your time. Take your time and then give me the correct answer. Understand the question, apply the provision, then find the solution. You are not either understanding the question, or if understanding the question, you are not applying the provision correctly. So please do all these things simultaneously. Understand the question, apply the provision, and only after that give the answer. Okay, Shoaib is saying B. Swaroop is saying B. Swati is saying B. Om Krishna Om Gupta is saying B. The correct answer is, of course, B. How? Medical insurance premium is paid 21,000 for mother age 65 years. So we have the limit of 50,000 in this case. We can claim 50,000 limit, but payment has been made only 21,000. For wife, he paid 26,000. So there's a maximum limit of 25,000 in case of spouse. So out of this 26,000, we can only claim 25,000. Now for the purpose of mother, 21,000 was the payment. And there was health checkup of 8,000, out of which we can claim 5,000 in the category of mother. We cannot claim this health checkup in a spouse category because the limit has already been exhausted. So this now comes to 51,000. So the correct answer is 51,000. Well done. Now question number 5. Mr. A commenced business in previous year 23-24 and appointed 150 regular employees. Salary is 24,000 per month. As on 1st June 2023 and 120 on 1st May 2023 at the salary of 22,000 per month as casual employees. Calculate deduction under section 80JJAA. What would be the deduction under section 80JJAA? Shoaib is saying C. Komal Preet is saying B. Okay. Any more? Tejal is saying D. Krishnan is saying A. Okay. In case of 80 double J double A, we have to find out the eligible employee correctly. That is the basic requirement of that section. So we have 150 regular employee, salary 24,000, not exceeding 25,000. So they are fulfilling the condition. These 120 employees are casual employees. They are not regular employees, so they are not eligible for the purpose of deduction. Now we will see how much deduction would be there. 24,000 into 150. And they are appointed for more than 240 days because they have appointed for on 1st June 2023. So salary is for 10 months from June till 31st of March. That amount comes 24,000 into 150 into 10. So there is amount. This is 36,000,000. This amount of salary need to be paid to these employee. And under section 80 double J double A, we can claim 30% of it. That would be 108,000,000. So the correct answer would be option number C. Clear? Next. The maximum amount of deduction which an author can claim under section 80 QQB of royalty income of other than textbook available to joint authors, assume two joint author under the optional tax regime. So what would be the correct answer? In case of joint author, how much deduction maximum can be claimed by a single author in this case? Is deduction is 3 lakh in aggregate for both the author, or it's 150 lakh each, or it's 3 lakh rupees each in case of joint author, or it's none? Swati is saying A. Okay. Satava Priya is saying A. Pooja is saying D. Bhumika is saying A. Okay. In case of joint author, the deduction is per person, not per book. You must have gone through with the provision. And the deduction is per person, not per book. So this deduction would be, correct answer is C, 3 lakh rupees each person, each author. So it cannot be in aggregate. If there are 3 authors, they can claim separately 3 lakh, 3 lakh, 3 lakh. Total is 9 lakh rupees maximum deduction can be claimed because the provision says it is 3 lakh rupees per person, not per book. Question number 7. Mr. X is receiving royalty for 4 patents, 1,50,000 rupees each in previous year 23-24. What will be maximum deduction that can be claimed under section 80 RRB? What is the correct answer of question number 7? Correct. The correct answer is C. Because deduction is as per person, not as per book, not as per patent, not as per copyright. So per person, the maximum deduction could be claimed is 5 lakh rupees. Next, X Limited is located in a special economic zone. From the following information furnished by it, compute its total income. Total turnover is 500 lakh. Export turnover is 400 lakh. Business profit is 50 lakh. Here export turnover represent export of computers at 80,000 per computer. what will be the deduction section 8010AA if previous year 23-24 is third year of this unit under optional tax regime? You could assume that the full amount of turnover has been received up to the specific date. There's a date that is 30th September of the assessment year. So you can assume in this question that the total amount of export turnover has been received within date. If the question is silent, you can assume that assumption. So what would be the correct answer of this? It is the third year of business. Reduction would be 100% of PGBP into export turnover upon total turnover. You need to solve this only. So we'll solve it. The correct answer would be D. Suppose if I've changed this third year to sixth year, then what will change? This 100% would be replaced by 50% and reduction would be 20 lakh rupees. Okay, well done. Last MCQs. Maximum tax holiday. This is simplest MCQ, I guess. Out of these 19 MCQ, this is the simplest one. So what is the correct answer of question number 9? Kindly read it yourself. The correct answer is maximum is 15 years, of course. 5 year, and oh God, this is simplest one. Pooja is saying B. Why Pooja? Why B? I am asking maximum how much it can be. So first 5 years, second 5 years, first 5 year 100%, second 5 year 50%, and the third 5 year it's 50% again. If you transfer that to SEZRAA account. So what is the issue? Total is 15. 5 plus 5 plus 5 is 15 years benefit. So correct answer is C. Okay. Now moving on to some other provision. We are discussing November 2023. November 2023 deduction question has been asked, and it has been asked from 80G provision, donations provision. So I've told you that it could be asked from 80G, and November 2023 it has been asked from 80G provision. Here is the question in front of you. It was on page number 14. Question number 4B. This is the question. This is for 3 marks. Okay. So the question was, income from profession has been given in the question. Okay, on this, again, my pen would not work. Let me open this question. Till that, you can read this question. November 2023. Okay. So the question is saying that income from profession is 11,70,000. Winning from lottery is 70,000. So total GTI is technically 1170 plus 70. So contribution to ULIP 1971 plan for a spouse 70,000. Check donation to National Defense Fund is 60,000. That is for 100% fixed case. Check donation to government for promoting family planning is 100% variable case. And check the deduction to approved public charitable institute is variable 50%. So we have 4 payments. Compute the deduction under section 80G allowable to him for the assessment year. Okay, this is the question. So we have to just calculate the deduction under section 80G. No other thing they asked us for to computation. Let me solve this question on a separate sheet. So for the purpose of claiming deduction, you must have remembered that you have to, your GTI would form in 5 categories. First one is casual income. The second one is long-term capital gain under 112A. Then short-term capital gain 111A. Then long-term capital gain 112. And these are others. So deduction could be only claimed out of this others category. So this income has been given in question 11,70,000. Our total GTI was 12,40,000. Out of this 12,40,000, 1170 was this, and 70,000 is our casual income. The deduction is for 80C. Payment for ULIP plan has been given in the question. That is eligible for 80C, 70,000. Now there are 3 payments have been done for donation purpose. The first category of payment to donation to National Defense Fund. So National Defense Fund falls in the 100% fixed category. So the payment has been made 60,000. So full amount can be claimed as deduction under section 80G. Now second is for check donation to government for family planning. So government family planning program falls under 100% variable category. For this purpose, we have to find out adjusted GTI. And the third category, in this category, we have paid 35,000. Third category is approved public charitable institute, which falls under 50% variable category. And payment has been made 1,20,000. So for point number 2 and 3, we have to find out the adjusted GTI. The adjusted GTI provision says the GTI less long-term capital gain 112A, 112 and 111A short-term less all other deduction. So our GTI is 12,40,000. There is no long-term 112A, 112 and 111A. But there are other deduction, 80C deduction is there, which is 70,000 rupees. So technically my adjusted GTI would be now 11,70,000 due to the deduction of section 80C. So adjusted GTI we have find out 11,70,000. Now 10% of this will be 1,17,000 or total payment made to these category. It's 1,55,000. Whichever is lower is eligible as qualifying amount. Now out of this qualifying amount, we will provide the deduction to the variable categories. In the variable category, always provide the reduction firstly to the 100% variable category amount. So the 100% variable category amount has been given as 35,000. So I will utilize out of this 1,17,000 qualifying limit, 35,000 as 100% deduction. So for 80G, 35,000 would be available from this value. Now the remaining value out of 1,17,000, we have used 35,000 in deduction purpose of 80G. The remaining would be 82,000 rupees. These 82,000 could be used for this charitable institute benefit. So now this 82,000 is going to be utilized for 50% variable category. So that will give the donation deduction of 41,000, 50% of 82,000. So this 41,000 will be the eligible amount for the purpose of deduction under section 80G. So total we have 1 lakh and 36,000 is the deduction amount under section 80G. 60, 40, yes. The correct answer is 80G is 1,36,000. So that was a 3 marks question in November 2023 examination. In other examination also there were question has been asked from deduction, but that was not individually from these kind of question. One more interesting trick, let me tell you regarding the examination purpose. In examination, there is a case scenario question is going to be asked generally. In question number 1, generally they ask. So whenever you come across with the case scenario kind of question, so it takes a lot of time when you read the paragraph, the whole paragraph in front of you, and you have to give a lot of time. Before this question, we try to understand the paragraph which has been given in the question. Then we start reading the MCQ, the requirement of the question, what they want to know from us. So kindly use the method reverse mode. Firstly, read out the MCQs. Like the first point is asking, assuming that Mr. Kamal has fulfilled all the conditions specified for claim deduction under section 35 AD and has not claimed any deduction under chapter 6A under C. Deduction in respect of certain income, what would be the quantum of deduction? So what is the requirement of first MCQ? It is asking what would be the quantum of deduction under section 35 AD, which he is eligible to claim as deduction. So first question wants to ask the 35 AD deduction. In the same way, the second is asking what would be the income chargeable as loss under the head profit and gain of business or profession for the assessment year 24-25. So second MCQ is asking about the profit and gain. Now you should read the question, the paragraph which has been given in the question. Why I am asking you to do so? Because if you read the paragraph, you do not know why you are reading these information. What is the use of these information? Why are you applying that, okay, fine, this age of 45 years, he commenced his business, hotel business in Delhi. You are reading each and everything and your brain try to capture each information. So you would be thinking that I should understand the question first, then I will solve the MCQ. But the process should be reverse mode. You should read the MCQ or you should read the requirement of a question, that what exactly question is going to ask you. Then now, if you read this paragraph, you will automatically focus on those points which is going to be asked in the MCQ. Like the MCQ is asking about section 35 AD deduction. So if now you will read this, he incurred capital expenditure of 50 lakh on land. So you will recall that land does not include for the purpose of section 35 AD deduction. So this I will remove. It is not going to be includable for the purpose of section 35 AD. So I'm just trying to explain. It's a kind of a trick you should apply in all these case scenario based question. First of all, read the MCQs. What is the requirement of question? Then start reading the question. So whatever the important things which we need for the purpose of solving our MCQ, we will automatically filter those things. We will retain those provision and we will skip the other irrelevant information which has been given or which might be given in the question. Okay. That was a trick for your examination purpose. Why adjusted total income is not 11 lakh? Komal Preet is asking. How or why it should be 11 lakh, Komal Preet? Adjusted total income provision says your GTI less capital gain, 111A, 112 and 112A, and all other deduction. So what is the GTI in question? It is 12 lakh 40,000 after including the casual income. Casual income would be the part of adjusted GTI. So 12 lakh 40,000 would be our GTI, and only one deduction under section 80C need to be reduced. That is 70,000. So after that, we would have our adjusted GTI, that would be 11 lakh 70,000 rupees. Clear? So any more queries from your side? Yes, Komalpreet. It means casual income is not deducted. It doesn't mean this. This is the provision. Let me show you the provision of section 80C. We discussed today only. For the purpose of section 80G, there is no requirement for deduction of casual income. There is deduction provision has been given over there. The specific format has been given over there. You should go through the provision, and it has been specifically mentioned that how to calculate adjusted GTI. You can see this on page number. We discussed this today. This is the provision. Page number 6.54, the step number 1 says compute adjusted total income, that is GTI, as reduced by the following. What we need to reduce? Deduction except 80G, short term 111A, long term 112 and 112A, or any other income on which tax is not payable. So it has been specifically stated that what we need to reduce. So why we will reduce the casual income? We cannot reduce the casual income. I hope it's clear. Good. Anything else you want to ask students? Okay, so if there is no more query, then we can close this session. Om Krishna is saying thank you, sir. Thank you, Om Krishna. Okay. Akshay is saying, once again explain, sir. What you want me to explain, Akshay? Kindly tell me what you want to know about the adjusted GTI. Ms. Sejal is asking, what deduction is available in 112 LTCG and what is difference between 112 and 112A? Sejal, there is no deduction allowed from 112 or 112A. There is no deduction allowed. I have just explained you with the help of this sheet. Deductions are only allowable from these income categories. There is no reduction from these 4 categories of income. Only any reduction under section 80C-80U, all will be allowed from only these categories of income, which falls under other categories of income. Okay, we will discuss this also in computation of total income and tax liability concept. The difference between 112 and 112A is 112A is for specified equity shares and equity oriented fund. We have discussed the provision of section 112 and 112A under capital gain chapter in detail. You should go through with that provision. 112 are other long-term capital gain. 112A is for equity shares and equity oriented mutual fund on which STT has been paid. So that is a separate provision, has been discussed in detail in capital gain chapter. So you should go through that chapter. Okay. Last slide. Which one? Kindly let me know. Akshay, that 80G provision you are asking me to revise or to explain again? I hope you are asking for this. तो चलो इसे हिंदी में बता देते हैं दोबारा. इंग्लिश में तो you can of course scroll back and you can see again. Qualifying limit निकालनी है because we have under section 80G. देखो भाई 80G में 4 कैटेगरी है डोनेशन की. कैटेगरी 1 इज फॉर 100% फिक्स कैटेगरीज. मतलब अगर इनमें पेमेंट किया तो पूरी डिडक्शन मिलेगी, किसी से कुछ कंपेयर नहीं करना, बट मिलेगी सिर्फ अदर वाले इनकम के पार्ट में से, लॉन्ग टर्म शॉर्ट टर्म कैजुअल में से नहीं मिलेगी, और अप टू द अमाउंट ऑफ जीटीआई मिलेगी. फिर है 50% फिक्स्ड. इसमें जितना पेमेंट आप करेंगे उसका 50% की डिडक्शन आपको मिल जाएगी, उसको भी किसी और से कंपेयर नहीं करना. फिर है 100% वेरिएबल, और फिर है 50% वेरिएबल. वेरिएबल मतलब इनको कंपेयर करना है क्वालिफाइंग लिमिट से. Now, what is qualifying limit? Here is the information for qualifying limit. क्वालिफाइंग लिमिट के लिए पहले आपको एडजस्टेड टोटल इनकम निकालना पड़ेगा. एडजस्टेड ग्रॉस टोटल इनकम. एडजस्टेड ग्रॉस टोटल इनकम कैसे निकाला जाएगा? आपकी ग्रॉस टोटल इनकम में से आप लॉन्ग टर्म कैपिटल गेन अगर कोई है सेक्शन 112 का घटा दीजिए, अगर इसमें जुड़ा हुआ है. लॉन्ग टर्म कैपिटल गेन 112A का भी घटा दीजिए. शॉर्ट टर्म कैपिटल गेन 111A में अगर कोई है उसको भी डिडक्ट कर दीजिए. कोई ऐसी इनकम जिस पर टैक्स नहीं बनता है उसको भी हटा दीजिए. और एनी अदर डिडक्शन एक्सेप्ट 80G, बिकॉज 80G तो आप ढूंढ रहे हैं, तो 80G को तो हटा ही नहीं सकते. 80G को छोड़कर बाकी कोई डिडक्शन अगर आपने जीटीआई में से दे दी है तो उसका भी डीटीआई में से देनी है तो उसको भी हटा दीजिए. ये जो बचेगा दैट विल बी योर एडजस्टेड ग्रॉस टोटल इनकम. इसका 10% और जो वेरिएबल में पेमेंट हुआ है उन दोनों से कंपेयर करके जो लोअर आएगा वो बनेगी क्वालिफाइंग लिमिट. आई होप इट्स क्लियर नाउ. Excess of 1 lakh deduction is there in capital gain. Is it right, sir? Excess of 1 lakh deduction in capital gain up to 1 lakh rupees is exempted under section 112A gains. There is no deduction out of capital gain, whether it's long term, etc. So no deduction from 112, 112A or 111A. There is 1 lakh rupees exemption out of capital gain which is covered under section 112A. Anything else? Sejal, okay. Now confusion is clear. Good. So if no queries there, then we can close the session, students. वो trick ध्यान रखना बच्चों. That case scenario trick that really works. Okay. So भार्गव जी हम सेशन क्लोज कर सकते हैं. Thank you.